Ladies and gentlemen, we're really pleased to see you here today. This is a terrific opportunity. I think we've got the China Investment Symposium here. And really what we want to do is explore the connections between the North American and the Chinese financial markets, which of course means bringing our businesses closer together as well.
There are a couple of markets that you can get exposure to China's companies. Here we have a few of them. Well, in China we have the A share, which is basically China's Shanghai and Shenzhen stock market. And B share is initially for the international investors in Shanghai and in Shenzhen, but it is now completely open to domestic investors.
I do want to make 3 comments on how you invest in China. One of the things is, if the government is encouraging you to do something in certain area, go for those industries, because the government is not going to change overnight. I personally like the farming area. The third area is technology driven. You know, you look at all these H shares and banks and so on, just think about why are they doing well? It's always something to do with innovation and technology.
Does it mean that earnings are going to continue to grow? Yes, but you got to be careful, because a lot of the earnings of major corporations in particular are based on stock prices going up. So as a feedback, this is a bubble. And I worry about the bubble. I worry about the bubble, but I also look at the transformation in the government and saying, okay, they're going to do what's necessary to prevent the bubble from cracking the economy. So you've got the who put instead of a Greenspan put. And that's what's going to drive markets. That's what's going to drive the Chinese economy. That's what's going to drive the global financial markets.
I think in the down the road, not only beside the Canadian stocks, but once we also will have an index or even ETF traded with purely Canadian listed Chinese companies, that's the market, really you can see is the, main thing will change. That's what we see in the next few years. We'll add more quality companies and will become more instruments for investors to invest in the Canadian market.
It's worth noting that China is actually the second largest source of international listings behind, obviously, the United States. And so we have seen some success there, and we do realize that there's tremendous potential there. In fact, when we look at the number of Chinese companies that are listed, I think the number bandied about today was 52, and that's including Chinese-related companies, but pure Chinese companies. Companies with headquarters there, management there, and operations there, we would count 36, and that represents about 16% of our international publicly traded companies.
I spoke at an outbound investment conference in Beijing and was absolutely blown away by the number of small to medium-sized businesses that are looking to come out and invest in other countries and are starting to try to figure out what Canada is all about. And the one thing that people fail to realize is China is our number 2 trading partner right now, and we're probably number 10 right now for China itself.
因为国内经济的高速增长呢，为股票市场的良好表现呢提供了一个非常坚实的基础。但是现阶段的话呢，我们觉得短期内 H 股的这个投资机会可能要略比 A 股稍多一些。
Well, it's an excellent conference. I've met some very good people, and I have some clients who I've introduced to some excellent people here. So it's one of the best forums that I know of where I can do the matchmaking that I need for key prominent people that will make business happen.
Well, we are really excited about the opportunities in China, and in terms of GCFF, this is now the second time in Toronto. We were in Shanghai, and every time it gets better.
Well, I think GCFF is a great place. You organize really good conference, and that allows us to meet some of our very important potential clients here. We thank you for that.
I really think you ought to be congratulated about all the great work you're doing, because, it's very difficult to bridge the gap between 2 countries, whether it's Canada and Europe, Canada and South America, or Canada and China. And it really needs people like your organization to actually bring people together. And I think you're doing it superbly well.
So thank you.
One, two, three. Thank you very much. Thank you for joining.
It somewhat gets into this kind of question that comes up in Canada all the time about the Canadian manufacturing sector and how can they compete with China. Things are so much cheaper there. So in some perspective, in some cases, it's all from your perspective as to where you're coming from. But at the end of the day, what's driving those labor costs is productivity. So, you know, you can only compete by being a cheap source of labor for so long. Eventually that sort of comparative advantage starts to disappear, and eventually you have to compete on the technology side, you have to compete on productivity. If you look at China, they do get that message.
What I'm going to do in the next 10 minutes is to convince why you should invest money outside of Canada, because it will actually give you a better potential return and actually reduce risk. So you can make more money and you can sleep better at night.
Because I've been with the company for 8 years, so I've seen this conference grow from a conference with 4 companies, small presentations, up to today. So I feel a little bit very, I don't know, I have a very good feeling today that we will turn out very well and we'll continue to build this conference next year and years onwards. So I would like to represent the company. Special thanks to you all to being here, support us.
So we have to develop strong policies to be a strong currency country that is successful rather than a weak currency country that is successful. So let me just foreshadow 2 elements of that. First of all, we have to develop strong, deeper, broader relationship with China, because as you know, the center of gravity of the world is shifting from North America and Europe to Asia. And so it's in Canada's interest to pursue that. And second, as I'll explain later, to compensate for our strong currency, we need lower taxes.
I am very confident that many of you here today will make connections, meet people, network, and obtain information that will allow you to further your business objective.
And China within 5 years. If you want to buy stocks in China, buy consumer-oriented stocks. Buy consumer staples. Not Coca-Cola, not Budweiser, you know, toothpaste, Procter & Gamble, that kind of company, okay? Shampoo, you know, more than 1 bath a week. Or, you know, you don't jump into the river anymore. You actually go and hit the shower button in your house. That's what's happening. And it's going to become consumer products revolution. And China's investment, you should be investing in consumer products companies.
What is risk? Risk ultimately is when you pay too much for a business and you end up losing your shirt because eventually the stock market will value a company correctly. Risk is buying a weak business model that blows up, or new competitors come in and just take that business really out to the backyard and beat it up competitively.
If you want to argue for $40 oil or $50 oil coming back, you have to say that the Chinese economy and the Indian economy are both together at the same time going into recession. If you can't argue recession in those 2 powerful, remember, that's 1/3 of the population of the world. 2.3 billion of the 6 billion people in the world are in those 2 countries. If you can't argue they're going into recession, you cannot argue now for lower oil prices. We will have recessions in the future. We will have lower prices in the future, but not now. Not in the next year or 2.
very unique start properly in the sense that we kept all the shares extremely